Hello again and welcome to this weekend market analysis for the 10th to the 14th of July 2017. Last week was indeed a week full of market confusion as the FOMC and the NFP held price in large ranges until they were released. As a consequence, we do not really have any valid setup based on our trading strategies at this time, but as traders it's important to take a brief look into a few pairs and see what has been going on over the past few days. Before we dig into the charts, let's look into the Forex economic calendar to see those high impact news events that are scheduled for this upcoming trading week. Alright, as you can see from my screen in the Forex factory economic calendar, we have some high impact news announcement for this upcoming trading week. Okay, well, Monday and Tuesday are free trading weeks, free trading days. We do not have any high impact news event for these 2 days. That means we are free to trade the markets without fear. Okay, well, you might have some medium and low impact news events, but as you know, we hector traders do not pay attention to low impact or medium impact news announcement because they don't really spike the market in heavy momentum. We only pay attention to our high impact news events because these are the ones that spike the market the most. They tend to invalidate our trading setups, so these are the ones that would really keep on our fingertips, on our notepads, really trying to avoid or trade them based on our trading strategies. Okay, all right, so Monday and Tuesday are free trading days for us, but from Wednesday to Friday we have all of these high impact news events as scheduled for the Forex markets. Okay, so if you are trading the markets from Wednesday to Friday, you want to be very careful of all of these high impact news events, especially on these currency crosses and around their news release hours. All right, these are the hours you want to keep in mind. Okay, all right, although every trader should worry about these high impact news events, but long-term traders which usually do not worry about high impact news events should keep in mind interest rate and monetary policy statements. All right, those are the ones that can spike the market in large momentum, that can affect a long-term trade. And we have just a few of them for this week. All right, first on the Canadian dollar axis, we have the Bank of Canada monetary policy report will be released, and of course it will be followed by the rate statement, then overall, and the most important, the interest rate. Okay, so for Wednesday, the 12th of July, long-term traders should be very careful trading the Canadian dollar, especially as these interest rate announcements will be being released into the markets. All right, so our interest rates are very powerful news events that are usually released into the market. It was previously set at 0.5%, and it has been forecasted to be at 0.75%. that's an increment. Okay, what really spiked the market is the actual result that will be released right here. This is what the market is expecting. Okay, all right, aside from that, you also want to be careful. I am now being particular with long-term traders with this American dollar Federal Reserve Chairman will be speaking. Yellen will be testifying on Wednesday, so you want to be careful trading all American dollar crosses on Wednesday around this news release hour. Okay, this news hour is set to my time zone, so you want to set the time based on your time zone to know exactly when that testimony will be coming out. All right, Okay, another one, I am sure Yellen will be testifying twice for this week. This is one in here, and you have another one right here on Thursday. Okay, so Janet Yellen will be testifying for Wednesday and Thursday, so you want to be careful with American dollars around these 2 days. Okay, All right. Any other important news event for long-term traders? Well, we have all day bank holiday for French bank. French bank will be closed in observance of National Day. So on Friday, you want to be careful with euro crosses, all right, because bank holidays can slow down price speed, can cause abnormal volatility. Remember, banks are one of the major movers of the market, so whenever they are on holiday, you want to be careful because price volatility can go abnormal. All right, so be careful with all euro crosses on Friday, the 14th of July 2017. Aside from that, long-term traders are free to trade the markets. Intraday traders, you want to be careful with all of these. If you are a news trader, then these are potential trading opportunities for you. We are news traders, so once these news items are due to be released, of course, we will switch over to our news trading strategies and begin to search for trading opportunities. Okay. All right, enough of this. Let's now look into the charts and see what we have waiting for us. Let's begin with the euro against the American dollar. This is the weekly time frame. Well, we have analyzed these pairs over and over, and last week nothing much really happened. Price was just in a range, so we are going to be brief with these pairs. Okay. All right, in the weekly time frame, as you can see, prices are challenging our falling level of resistance right there. We have said this before, and the momentum is still pretty much to the upside. Okay, there is no sign of a rejection of that level of resistance for now. Rather, we are seeing a range. Okay, we are seeing that hesitation candle right there. There is no hint yet. We might have a sideways price action, then either a breakout or a bounce of that level. You don't want to be clicking on your buy button against that level of resistance. You don't want to do that. At best, you should be searching for possible short opportunities from that point on, if only your trading strategies gives you a hint. All right, if there is no hint, you don't want to gamble. You don't want to click on your sell button simply because price is around this level of resistance. If you click that sell button blindly, don't be surprised to see price pump to the upside and kicking your stop loss out of the way. Okay. All right, so last week was more of a range, that kind of a pullback, a candle there. Let's look into the daily time frame. We might have a clearer picture right here. Okay. All right, in the daily time frame, I was trading this pullback, and I got some nice profit for last week. That was a good trade on my side. You can see that range. All right, price for the last 5 days, 1 2 3 4 5. That's last week. We got price trading around that range. You can see that little range for the whole of price action for last week. That wasn't plenty of volume to have found good trading opportunities in this pair. All right, so what pattern I would really seeing here, right here now? Well, if you zoom into the 4 hours time frame, you will see exactly what has been happening over the last few days in the euro against the American dollar. So let's see the 4 hours time frame. Okay, euro against the American dollar. This is the 4 hours time frame. I am simply going to delete all of these long-term lines so we can have a clear medium-term chart, a clear medium-term price action for us to be able to read. Okay. All right, if you want to draw a 4 hours trend line, you should be starting from this focal point. All right, that is the beginning of the trend itself. That is the first bounce, price swing up, came down, swing down, then I went back up again. So if you want to draw your trend line, you should be having that outer trend line right there. These are those specific bounces. Okay, so you should follow that. Of course, you can have some inner trend lines, and like you know, we don't really keep inner trend lines. If we are trading the trend collapse strategy, you can have one from that point. Let me actually use a standard trend line. All right, inner trend line. From this point, you can have one right here. You can also have another one right here. So we have plenty of inner trend lines. Okay, all right, two inner trend lines here to be more precise. One beginning from here, the other beginning from here. So price found support around in here. All right, so here should be our internal support. Even if you are trading this pair, you want to be careful around this junction of the chart, because price can bounce off that point and begin to push back up. Okay, so those are inner trend lines. For now, we are simply going to keep that inner trend line, the first one right there. Well, if you are very vast in price action reading, you should be looking at the closer picture. This level here has become too old. All right, that range there has become too old. Upon this range, this sideways price buyers, price took off. Okay, leaving this range, forgotten totally about this range. In fact, did not even pull back. We didn't even have any pullback to retest that point before the push to the upside. Price just cruise all the way to the upside before we are seeing the sideways price action. So as a good price action trader, you want to be focused about what has been going on since this range we are seeing here started. All right, so what price pattern are you really seeing here? Of course, if you look at the high itself, we have that most obvious swing high right there, and price came back down, went again to challenge that area. So we have a double top. All right, that is a double top, and you can also see that we have this swing low right there, and this one here is quite higher than this previous one. So we have this is a lower swing low and this is a higher swing low. Eventually we have this pattern, which is more of a triangle formation. So let's use our standard trend line to draw that pattern. Connect the two swing lows. All right, it's a 4-hour level of support, so we are going to just keep that line within our 4 hours time frame and below. Then we are going to mark the upper boundary of that double top right here. Okay, upper boundary, that double top. As you can see, price has challenged this level here. All right, this previous swing high, we got the bounce right there. As the NFP news release was pumped into the market, we saw a hit of that point and price came back down. So right now, the euro against the American dollar in the 4 hours time frame is in a range. You can see that range clearly, and price right now is in the middle of nowhere. You cannot take any trading decision around this point. Okay, of course you can take a trading decision, but you cannot take a trade within this area right here. This is a no man's land. Price can bang to the upside or keep pushing to the downside. As a sensible trader, you want to wait around this key level of resistance or around this level of support. If price comes down here, this is where you want to be searching for long opportunities. All right, of course that is for only range traders. We don't trade this. All right, this is quite risky. We don't trade this because it doesn't fall on any of our trading strategies. So you need to wait. All right, if you're an aggressive trader, need to wait for price to hit these two levels. This one here as resistance, this one here as support. So that is what has been going on for the past few days. 1, 2, 3, 4, 5, 6, 7, 8 days. This is what has been going on in the euro against the American dollar. The bias remains to the upside. Sorry about that. The bias remains to the upside. My advice here is to wait. If you want to look for buy opportunities, wait for price to come all the way here. At best, this is where you should be looking for your long opportunities as an aggressive trader. I repeat, this does not fall in line with any of our trading strategies. Well, in the daily time frame, I just hope I am not taking too much time on this pair, but I need to pass across this important information. In the daily time frame, we have the 3 SMA calling for an uptrend. Okay, let me fire in that indicator so you can see very clearly. Of course, you can see the 3 SMA in the daily time frame calling for an uptrend. That green light is that price is trending upwards. Okay, we had the first bounce of the dynamic area of support and resistance. We don't usually trade the first bounces, so that has taken off. Right now price is in that range. Okay, that range. If this range continues, if price keeps swinging up and down and the dynamic area of support and resistance catches up with that range, then we might be finding another buy opportunity in the euro against the American dollar to the upside. Well, that's will happen in a couple of days, so it is not yet a time. So let's keep monitoring price in real time within this early range formation. Okay, that's a flat top triangle in the 4 hours time frame. We'll keep monitoring price in real time. All right, let's look into the next pair, the American dollar against the Swiss franc. This is the for the weekly time frame. Weekly time frame, we have a large range, a very large range right here. Price has been moving sideways for several weeks, but we are more concerned with what has been going on in the past few weeks. Recall that in the daily time frame we had what was a channel, right? That hesitation there was a channel. So let's see the daily time frame. That channel is still intact. For those of you who are aggressively clicked on your buy button, you should have made some small profit to the upside. Well, that wasn't in line with any of our strategies as well. So price is still within this channel boundary. Okay, well, hopefully prices are pushing to retest the upper leg of that channel before it will come back down. No one is sure. Price is in the middle of nowhere. Anything can happen. It can push to the upside, it can keep dropping to the downside. I am not really sure anyone can predict what will happen at that junction of the chart. So you want to wait for your trading strategy to, of course, give you that hint. And based on our trading strategies, there is nothing here in the daily time frame for us to trade. Price is simply in this channel. If you want to trade aggressively, you need to wait here being resistance to look for short opportunities, or here being support to look for long opportunities. You don't want to trade in the middle of nowhere, in no man's land. You don't want to take any trade around in there. At best, you want to take your trades around the key levels of our support, all right, and resistance. So in the 4 hours time frame, what are we seeing? Well, I am seeing some kind of a range in the 4 hours time frame. Obviously these lines here have become old. They now belong to the daily time frame, so we are going to change their colors to red. Okay, they no longer belong to the 4 hours time frames. They are now red. So there is something happening in the 4 hours time frame in the form of a range. So let's see the 4 hours time frame as well to see what has been happening right there. All right, this is the 4 hours time frame of the American dollar against the Swiss franc. You can obviously see that swing point there. This is another one here. This is the latest to the downside, and this is a higher swing low. Okay, so if you connect that 4 dots, you are very likely to have another channel formation. Okay, within the bigger channel, which is in the daily time frame, you are having an inner channel in the 4 hours time frame. Well, this is some form of market confusion. So let's just connect those points, those 2 points. Okay, and this is based on the 4 hours time frame, so we are going to change that color to green, and just keep our lines within the 4 hours time frame. And to the downside, we have the lower channel leg. This is obviously a clear channel that we are seeing in the American dollar against the Swiss franc. So on your intraday time frame, you want to be waiting around in here, which has been acting as support and around in here, which has been acting as resistance. If price comes down to retest this level of support and you are looking to go long based on your trading strategy, well, all of your stop loss level should be somewhere below that previous swing low. All right, that should be somewhere around in here. That should be your stop loss. If price breaks below, you don't want to move your stop loss, because once price breaks below, the entire pattern has come to an end and price is likely to keep pushing to the downside. So if your stop loss is hit, you need to accept that loss. Okay, losses are normal in this business. You need to accept that loss and move on, looking for a next trading opportunity somewhere in there. It is very likely again that price might bounce to the upside to retest the upper channel leg, which might be a confluence with that in the daily time frame for price to come back down. So it's a wise decision. All right, it is absolutely wise if price retraces to this point and you click on your buy button and place your stop loss somewhere around in there. Hopefully price might push to the upside. Okay, I must stress, this is not part of our trading strategy. Okay, it does not give us any valid setup whatsoever in here, so we are not taking any trade within this channel, except if we find a valid setup that conforms with any of our trading strategies. Before, we'll be very willing to take a buy entry. But if your trading strategy gives you a buy signal around in here, well, that is just a confirmation that this level is indeed a level of support, and so you want to take that. Okay, if you are trading Hector strategy, there is no valid setup here for us to trade at this point. Okay, all right, let's look into the next pair, the Australian dollar against the New Zealand dollar. This is the monthly time frame. Recall that we have analyzed this pair before. Price is in a wide monthly triangle. Okay, a wide monthly triangle. This level here has been acting as a support, while this one has been acting as resistance. Price is right now very close to the support line, and you should be looking for long entries if this level of support will hold. For now, there is no hint in the monthly time frame for us to take any entry, but then you should not be clicking on your sell button against this level of support. You shouldn't do that. Okay, all right, let's see the weekly this is actually the weekly time frame. Let's see the daily time frame. The daily time frame, well, you can see what has happened in this pair. This pair has been pushing to the downside for a couple of days, although the move itself is not really clear. But then look at what has happened here. From this point on to the downside, price has pushed constantly without even giving a single green candle. No single green candle. That is a strong fall to the downside, and after then, what do we see? A range. Okay, that is a range, and this range here is what we should be paying attention on. What type of price pattern are we having in the Australian dollar against the New Zealand dollar? First, we have price banging off that level, and we have a re-challenge of that level again right there. So we have a double top. Okay, double top. Then right here we had a swing low there, which is quite higher than this one here, a lower swing low, and it seems we are now having a higher swing low. So eventually, this is the pattern that we have. Okay, that is the pattern right there, and most of you are aware of the shoulder head shoulder pattern formation, and this pattern usually happens when you have a strong fall. All right, a strong fall or a strong buy in any pair. In this case, we are having a strong fall. All right, a strong push to the downside before we are seeing that range. So what do we need to do? We need to simply mark that high with this is happening in the daily time frame, so you need to simply mark that with a red line and just keep your line within the daily time frame. All right, so that is the high. Of course, a double top, one there another one right there. This level here, yeah, if you're a price action trader, you want to mark that level. All right, you want to just keep that level as an area. That is an area where price has been bouncing off. You can see the first bounce right there, another one right there. Right now price has dipped into that point as support, and you should be looking for buy entries. That is not a place that you want to go short. And of course, again, the this shoulder is quite higher. This one is the head, which is lower, and this is another shoulder right here. While traders are looking to go long here, well, we will be more interested in the breakout of this double top. If we get a solid breakout, we'll be looking for continuation formations. Obviously, price, if broken above this neckline, should be able to move in this proportion, all right, in the distance of this range from the neckline to the head level itself. Price should be able to push in that same distance, all right, in that same distance. So if we get a breakout of that neckline, we'll be looking for a profit target in the proportion of this neckline. So an equal push to the upside should be our first target once that neckline is broken. Well, this is still quite far. We still need a couple of days for price to be able to push above this neckline. So I am only analyzing to let you know what has been happening around this pair. Okay, all right, delete this, bring in a standard line right there, a retest of the first shoulder. Price retesting that first shoulder. From here on, price is likely to push to the upside. If it doesn't push and price keeps pushing to the downside, well, this pattern overall has come to an end, and you might begin to look for other patterns, possibly a channel formation with let me just try to draw that. Okay, although it hasn't happened yet, possibly channel formation with this level here, which has been acting as support. This one here is support. You might likely find another one here as support. So right here, price might push to the upside, and you might begin to think of another line right here, which might be a channel. All right, this is a long process, and we will keep analyzing this pair in real time for our traders. Okay, but for now, this is what we have, and price is likely to push to the upside. We are watching this key level, which is the neckline, for a possible breakout, pullback, continuation pattern. All right, this is it has been a long explanation. Let's quickly move on to the next pair, the American dollar against Japanese yen. Last week we analyzed that this pair calling for traders to be careful around this junction of the chart, as price might be respecting the upper triangle leg that we have right there. Okay, well, the NFP was released into the market, and we saw price in the last 3 days before Friday struggling around that area. You can see the last 3 candles before the breakout. That was indeed a level of resistance, and you can see the fight right there. For us, there was no hint to go short, so we did not click on our sell button. As the news was released, you can see that pump to the upside. All right, well, that was a news impact, and I have been saying it that high impact news events can actually invalidate any setup that you have, and you can see that right here. For any trader that has gone short around that level before that news was being released, I am sure that trader would have been hit on their stop losses, or they are currently sweating on a loss. Okay, but at any rate, this is not over. Price is likely to drop back down. If price drops back down, then eventually we have a fake breakout of that level of resistance, and we might see further pushes to the downside. So it is not over. We are still watching this pair right here to see if we get a fake breakout. Okay, again, you want to be careful whenever you see price in this type of channel formation. You can see how price has been zigzagging in that tiny range, so you want to be careful because it might be turning back down any moment soon. Okay, if price decides to keep pushing to the upside, what is the probability that to keep pushing very strongly? Well, we have an higher swing low. This low is quite lower than this one here. You might begin to think of a possible channel formation, maybe something like this. Okay, you might begin to think of a possible channel formation, and which is something that I have in mind as well, that price might push to that junction of the chart and from there on drop back down. So we might be having this channel formation. Okay, all right, so this is very possible, and you don't want to go long in this area. You want to be absolutely careful around that point, because we are still in a potential resistance zone. Aside from that, if you connect this swing high, this one in here, just draw your straight line. Price again might be facing resistance around that point, so you want to be careful with the American dollar against the Japanese yen anywhere in here. And if all of this gets broken, well, you want to look backwards. All right, you want to look backwards. We still have some other levels of resistance. This one right here, somewhere in here are still areas of resistance, so be careful going long with the American dollar against the Japanese yen for now. All right, let's look into the next one. Sterling pounds against the Swiss franc. Let's just make some quick updates. Right here, price has been in a range, several ranges. My advice here is to avoid this pair, stay away. Price is ranging, and these ranges are not good for us. Everyone is expecting that price might be pushing to the upside, but we are not seeing that momentum push. So you want to avoid this pair for now until you get a clear light to click on your buy button. In the daily time frame, a range, a very nice range. Initially we had that kind of a triangle formation. Okay, but right now we are getting a confirmation of the upper channel leg. So we have price swinging up and down. Price is in the middle of this channel. We are not sure what is going to happen right now. It might turn to the upside, it might keep pushing to the downside. If this channel will hold true, then it will keep pushing to the downside. But what we have in here has nothing to offer us based on our trading strategies, so we are not taking any trade in this pair for now. Okay, another one is sterling pounds against the New Zealand dollar. Recall that we were talking about the trend collapse strategy based on this level that has been acting as resistance and now acting as support. We are also having a range. This is not good at all. Our trading strategies are momentum based. We want to see heavy push, a rejection of that point. So if you are involved in this pair, our advice is to close the trade and just wait, all right, for a clear hint. You can see that range in the daily time frame. See how price hesitated for a 1, 2, 3, 4, 5, 6, 7 days, just sideways behavior. You want to close the trade and wait, all right, because price might begin to push again to the downside, kicking all of our stop losses. This is not good at all. That is an early sign that you need to get out of that trade for now. Okay, all right, last week I took a trade in the euro against the sterling pounds, an aggressive trade that I actually shared with you. Recall that I said this level does not belong to the weekly time frame, but I went ahead taking this trade because of the strong pin bar that I had at that particular level. But this is a daily level of resistance. I would have waited for any pin bar within the daily line to take that trade, but at any rate I have taken that trade, and my stop loss is still there. My entry is right here. Whatever happens, I have no cause to regret. Like I said, losses are normal. If price kicks my stop loss, well, I will be looking elsewhere for another trading opportunity. Okay, all right, the trade is still running at a loss. What I am seeing in the daily time frame is a potential channel formation. Okay, of course in the forward time frame we will be able to see that more clearly. Let me take out all of these lines. If I had seen this channel early enough, I wouldn't have taken this trade, because this is actually a bad entry within the lower channel leg of this pair. In fact, I would have predicted this lower channel bounce. Haven't seen these two bounces to the upside. Let me adjust my screen. Haven't seen these two bounces to the upside. I would have predicted a lower channel leg around that point before clicking on my sell button. Right now, price has just confirmed the lower channel leg and is pushing to the upside. Well, I am hopeful that I am going to see a bounce to the upper channel leg for price to rescue me on this trade. Okay, this is a bad trade right now, but I am not shaken. Okay, I am not shaken. From time to time you make one or two mistakes, but these mistakes should not be too much to weigh down your trading account. They don't happen quite often. Once in a while you might have one or two errors analyzing the markets. Okay, so this is one bad trade now for me, although last week was quite a brighter week for me. But this one sitting right here, if price comes anywhere close to this trade, I am going to close it out completely. Okay. Alright folks, thanks for watching this video. This is basically all, quite a lengthy video again. No matter how hard I try to make it short, well, I just need to explain for you to really understand what we are seeing in the chart. It's about 36 minutes gone. Thanks again for watching. I will be talking to you again in the next weekend market analysis. If you like my videos, please simply click on the like button or subscribe to the YouTube channel to keep getting some amazing fantastic market analysis. Cheers and bye bye.